All eyes on the key GST Council meeting, two-day meeting to discuss the GST reforms. Finance Minister Nirmala Sitharaman will be chairing the GST Council meeting. These are the next generation GST reforms, just ahead of the festive season. Donald Trump faces fire on the tariffs that has been levied on India. The bonhomie between Prime Minister Narendra Modi, the Chinese Premier and Vladimir Putin is rattling the US administration. Former US officials are blaming Donald Trump for the drift between India and the United States of America. Piyush Goyal says a trade deal could be signed by November. Donald Trump launches a big attack on China, says US gave blood to secure China's freedom, alleges Xi Jinping along with Kim Jong are conspiring against the United States of America. The top story that we are following here on India Today, coming in from the political scenario now. After Pawan Khera, his wife Kota Nilima is also in the BJP crosshairs over two voter ID cards. The BJP has launched a fresh attack on Congress, targeting not only senior leader Pawan Khera but also his wife Kota Nilima. The BJP is alleging both of them hold multiple voter identity cards. BJP IT cell chief Amit Malviya has claimed Nilima, who actually contested elections in the state of Telangana, has two active epic cards, one in the state of Telangana and the other in the national capital. They have linked this to the earlier revelations that Khera himself is now possessing two voter ID cards. Allegations are now being raised about Pawan Khera's wife also. My colleague Piyush is now joining me on the story. Piyush, we are now seeing the BJP pointing fingers at Pawan Khera, not just Pawan Khera but even his wife Kota Nilima. The BJP is alleging Kota Nilima also has two voter ID cards.
That's right, Ashwara. This has now become a huge flashpoint between BJP and Congress. Remember that yesterday Amit Malviya had come out with a post on social media platform X where he had mentioned that Pawan Khera possesses two voter ID cards, two epic numbers are there. And today Amit Malviya has claimed that not only Pawan Khera but his wife also has two epic cards. One is from Khairatabad in Telangana and another one is of national capital. So yesterday when the allegations were leveled, Pawan Khera had also come out with his defense claiming that, he had he had in fact surrendered the one epic card, one voter ID card much before, but it was the job of Election Commission of India to ensure that his first voter ID card is deleted and his voter ID address updated to the new one. But that did not happen, and that's what the Congress has been claiming that the Election Commission is not doing its job. So we are now seeing a store allegation versus counter allegation are now being made on this entire matter. But Amit Malviya again has come out with a fresh claim, Ashwarya, where he is now saying that not only Pawan Khera but his wife also holds two epic cards. We'll have to wait and watch how the Congress party and especially Pawan Khera and his wife are going to comment on this big revelation which is now coming to the fore.
Thank you, Piyush, giving us all those details. It's the Bharatiya Janata Party which is now pointing fingers. And this is not the first time. We all saw the press conference that was held by another senior leader in the BJP, Anurag Thakur, where he had said that there are multiple voter ID cards that are now being owned by various leaders. In fact, Tejasvi Yadav also, in that famous press conference when he had dialed in his epic number, that number came out to be false. The Election Commission is now looking at these multiple cases which are coming to the fore. After Pawan Khera, his wife Kota Nilima also in the BJP crosshairs. The BJP is alleging she also has two voter ID cards. RP Singh from the BJP is now joining me on the story. Mr. Singh, we are now seeing one after the other these multiple cases coming to the fore. Yesterday it was Pawan Khera, now even his wife Kota Nilima apparently has two voter ID cards.
Thank you.
Can you hear me, sir?
No, I couldn't hear you in between. Now I'm able to hear you.
So, we just saw Pawan Khera and those were the allegations that were made by the BJP. They showed the two epic numbers. We'll try and reconnect with RP Singh from the BJP. Now, after Pawan Khera, his wife Kota Nilima also in BJP crosshairs. The BJP is alleging she also has two voter ID cards. In fact, the Election Commission has given till 11 a.m. on the 8th of September, That's the deadline given to Pawan Khera to give clarification with regards to these allegations. Let me now go across to Aabha Bakaya for Business Today TV. All the updates on the markets and what's new. Aabha, over to you.
Thanks for that. Good morning and welcome to Market Opening on our brand new collab show between Business Today and India Today TV. It's 9 a.m. and we're here to get you ahead of the curve as markets kick off trading for the day. From the big overnight queues on Wall Street and global markets to the buzz around corporate earnings, policy moves and stock-specific action, we break it all down so you know exactly what to watch out for. Stay tuned as we track the Sensex, the Nifty and the stories that will drive the market mood today. And catch us again at market closing with my colleague Sakshi Batra. First, let's take a look at what's hot in the corporate and the financial space. Let's kick off with the top stories. The 56th meeting of the GST Council begins today. The Council, headed by Finance Minister Nirmala Sitharaman, has the finance ministers of all states as its members. The two-day meeting is expected to bring huge tax relief to the Aam Aadmi, something the Prime Minister had promised in his Independence Day speech. Gold jumps to fresh all-time highs and the global market hits $3,547 to the ounce. That's its sixth straight day that the yellow metal has set a new record. Prospects of the interest rate cut in the US and its safe haven status have pushed gold up more than a third this year. Gold was also the favorite of traders following a sell-off in equity and bond markets overnight. The Wall Street ended in red on Tuesday after a federal appeals court shot down Trump's tariffs last week. The ruling also sparked a sell-off in US Treasuries and a big rise in bond yields in the US, UK and France. Google won a major legal victory with a judge sparing it from selling its Chrome browser and other harsh antitrust penalties. Judge Amit Mehta handed the big tech a rare win in its battle with the US government, but ordered Google to share data with rivals to open up competition in online search. Alphabet shares shot up 8% after the ruling. Donald Trump has made it clear again he's not looking at lowering tariffs on India. It was a one-sided relationship for many years, he said, giving the example of Harley-Davidson again. The US president also said he was seeking an expedited ruling from the Supreme Court on the illegal tariffs ruling by a federal court. Something interesting has been happening in the US and European markets. Wall Street indices ended in the red on Tuesday after a weekend on Monday. The S&P 500 fell 0.7%, Nasdaq Composite fell 0.8%, while the Dow Jones Industrial Average fell 0.6%. Now, the reason traders were nervous was after a federal appeals court ruled late last week that Trump's tariffs were actually illegal and should be suspended by the 14th of October. This also led to a big sell-off in government securities from Europe to the US and now to Japan as well. Bond yields have risen sharply to near 5% in the US, 27-year highs in the UK, and a 16-year high in France. Traders are nervous about several indicators, from key economic data and the US tariffs to Fed independence, mounting debt, and monetary policy and global fiscal prospects. So lots of factors that are playing into the sentiment here and really affecting what we're seeing on those global market ticks. Gold, meanwhile, extended a 6-day rally to hit a fresh all-time high. We've all keenly been watching the move on the precious metal as the prospect of the US interest rate cut boosted the metal's appeal and traders sought safety following a sell-off in equity and bond markets together. Gold for immediate delivery rose as much as 0.4% to hit $3,547 an ounce as markets opened in Asia on Wednesday, narrowly higher than Tuesday's record. Prices have advanced 5% over the past 6 sessions, underpinned by increased haven demand amid renewed concerns over the Fed Reserve's future and budget concerns in the developed world countries. Gold has also risen more than a third this year, making it one of the best performing major commodities. Gold and silver, of course, continue to remain key investment picks right now. But let's move across to my colleague Shailendra Bhatnagar, Chief Analyst and Editor Markets, Business Today. Shail, on this move in gold, it's fantastic, but just break it down further for our viewers as to why it's shooting up.
Good morning, Aabha, and a very warm welcome on this wonderful show. In school, we read Shakespeare, Aabha, and that wonderful line always comes back to me. All that glitters is gold. And this is exactly what is happening as far as markets are concerned. We'll see 1,06,000 rupees per tola maybe today. As you mentioned, it's a 5-day rally, and both gold and silver are rising for 2 very sound reasons. This geopolitical issue between the US at one side, China, Russia, India and other BRIC countries at the other, plus rising bond yields, as you mentioned, are the reasons why you have this wonderful rally in gold. And things are only going to get better and better as far as gold and silver is concerned. That's because it's safe haven buying. Central banks are buying, you are buying, I am buying. Everybody is out to buy and save themselves from inflation. So these are the 2 major reasons why gold and silver are up, and they are the top performers as far as any asset class is concerned. Things are going to get better from here.
All right, so the outlook remains positive as well. Shail, how does that impact long-term bonds?
Well, Aabha, that's a very interesting question that you put up. And again, there is that lovely Wall Street dictum which says, gentlemen prefer bonds. And the reason is that there is fear in global bond markets that you will see slowing growth in especially the UK, especially large parts of Europe, and of course, to some extent India as well, because of the GST rejig, and the US too. And that's the reason bond markets are sort of edgy, and they are pricing in that slowing growth. They are also pricing in a cut in interest rates, especially on Wall Street. And that's the reason, Aabha, that you have higher bond yields coming into not only the US, UK and other European markets, but in India too. The GST rejig, which is about to take place today, may result in a minor drop in GST collections that might force the government to borrow from the bond markets, and that is what is exactly being priced in. The Indian 10-year yield has also risen from August 18th, just a day after the Prime Minister made his Independence Day speech. So both bonds, gold and silver, are in a very super bull market as far as risky assets are concerned. Aabha.
All right, Shail, stay with me because, of course, lots of action on Wall Street overnight. But talking about some of the cues for the bond markets, as you just mentioned, and with all eyes on the GST meet, we've opened or seeing a gap up on the Nifty in pre-open. I'm just going to pull up some of those opening ticks for you. A marginal uptick, but almost 0.2% there. Then, you know, with the sectoral indices, banks are still soft, but it's really the Nifty to focus on this morning to see the kind of sentiment. See, as we're watching, in fact, the ticks are moving higher as we speak right now. So clearly, Shail, I'm going to get a quick take from you there because the sentiment impact is obviously immediately playing out.
Absolutely, Aabha, and the reason is very simple. GST rejig means lower costs for 2-wheelers, 4-wheelers, stocks such as Hero Motors, stocks such as Eicher Motors, tractor maker M&M, all of them are benefiting. In fact, look at Maruti. Small cars will become much more attractive because GST prices will come down. And as you know, since February, the government has been giving lots of sops. So first we had an income tax rate cut in the budget. Then we had this rejig as far as corporate taxes are concerned, and now the GST rejig. In the background, you have good monsoons, you have lower interest rates, and that's the reason why Dalal Street is super excited. Mostly auto stocks, mostly FMCG stocks, and of course consumer durables. Aabha.
All right, Shell, thanks so much for that. And auto has seen a lot of news this week. We also got Amit Khurana joining us from Dolat Capital. We're counting down to market opening now. Amit, great to have you with us, and I'm going to dissect some of those newsmakers with you in just a moment. But right now, let's keep our eyes on the pre-open and also quickly run you through some of those other newsmakers we'll be watching out for as markets kick off today. TCS has expanded its strategic partnership with Trig. That's a leading Scandinavian non-life insurer. We've got Indus Towers that has also cleared a foray into African markets. So that's another one in the news this morning. But really auto, and I'm just going to come back to that as markets kick off because we're counting down to the GST meet. We're seeing that gap up on the Nifty, opening with a green tick this morning, and we'll wait and see how it continues through the day. I want to pull up all of those auto stocks because that's really where a lot of the action will be, at least on the Nifty 50, and then we can, of course, look at the broader markets as well. But look at the auto index. It was up about 0.5% in pre-market. We'll bring it up right now and also bring up Hero, Eicher, Maruti, M&M. Take a look at how some of those stocks are doing because a lot of the focus will continue to be there as we really dissect and watch out for the action. There you go. M&M is up 1.5% right now. We're also seeing a nice green take on TCS post the news. Zomato continues to be a strong mover today, has been actually pretty steadily gaining through the week. ONGC is back in the green today as well. Some of the top movers for you there on your screen. Few other newsmakers, let's see if they're seeing any kind of action as well from the broader markets. Wari Energy is there. They're looking at an acquisition, a 200 crore acquisition coming in. So we'll pull that one up for you in a short while and see if that's seen any kind of uptick. And PNC Infratech has also emerged as a bidder for the development of Varanasi's Lal Bahadur Shastri International Airport. So Wari, 0.8% up there, and PNC 3%. So PNC, in fact, they've emerged as the top bidder for the development of Varanasi's Lal Bahadur Shastri International Airport, which would obviously be a huge positive for the stock. Adani Power has gotten the coal ministry nod to begin operations at the Dhiroli mine, that's in Singrauli, Madhya Pradesh. So let's bring that up for you as well. Take a look at how it's faring on open, Adani Power. And 5% uptick there. So that's also for a new mine in Madhya Pradesh. So that's the tick. Okay, 1% on an Adani Power. Yes Bank, CCI has approved an SMBC stake acquisition. So Yes Bank in the news. Lemon Tree has signed 3 new properties as well. Ajmer, Pushkar, and plus a Keys Light as well. So that's a lot of action there for Lemon Tree this morning. Nice green ticks coming in across the board. And MOIL has also reported its highest ever August output. So that's another one that's buzzing this morning. We'll pull that up for you as well. Let me go straight across to Amit now on the opening trades. Amit, markets are at the moment now flat again after that uptick on opening, but everyone is counting down to the GST meet and expecting a huge fillip on the back of that. What are you watching out for when it comes to trade, over this week, especially given all the news that's anticipated?
Well, yeah, I mean, GST will be one of the key, announcements to watch from the government. This is exactly what we were talking to our clients way back in May, June, that this is one last lever which the government will possibly play out over the next few months. And this is exactly how it is shaping up. Now, the fine-tuning of the rates, I think, will be watched very closely as to what moves from 12 to 5, 18 to 5. And then accordingly, you will realign your expectations of earnings, demand buoyancy, potential loss on the revenue side, of course, and other aspects. So very important announcements, but sentiment-wise, much more supportive of the market valuations, and hopefully the consumption starts behaving better. Not wanting to sound too bullish. Let us see how it shapes up and how the consumer reacts to that entire announcement as we go along.
Okay, so remaining a little cautious, wait and watch there. But Amit, I want to bring up those auto stocks. That's really where we're going to see a huge consumption boost. Remember, we're also in festive season, which is always the high point for some of these consumer names, especially auto and two-wheelers. I also want to bring up Ola Electric. Let's bring that up for you. A couple of other newsmakers there as well. We're seeing two-wheelers overall, of course, gaining. There has been some news on easing off on rates on hybrids while increasing taxes on those higher-end EVs. But Ola Electric, of course, is up almost 2% this morning. Want to get a take from you on that particular counter?
Well, we don't have an official stance on it, but I think the major re-rating in the last few days has been triggered by the approval of the PLI and the potential unlocking of supply chain issues. Ola has had some challenges in terms of quality and consumer perception. And I think some of those issues seem to be getting addressed now, and therefore the level of re-rating that you're seeing. I would reserve my take on the counter, especially we have to see the new launches, how they perform and how the consumer perception changes. But the broader take, I think, on two-wheelers, Ola included and other names included, seems to be far more supportive, given that we did not see a very strong demand since the last almost 7-8 months. And with the GST cuts, the way they play out, should support the demand for the traditional two-wheelers. On the EVs part, I think we have to wait and see as to which category gets impacted in whatever fashion. There is a sense that some of the 350cc, below 350cc will possibly get an advantage, but we have to wait and watch.
Okay. There are a whole host of other segments, and before I come to the stocks and news, because we are tracking GST this morning, Amit, that are likely to be impacted from the broader markets. Are there any key pockets that you've got your eye on? Because the key beneficiary will range from dairy to, of course, textiles, footwear, air conditioners, cement, even some of those telecom stocks. Are there any pockets particularly that you perhaps are tracking in light of what we're expecting from those GST reforms?
Well, these are all the pockets. You said it all, essentially. I think the playbook that the government is going is with the consumption has really underperformed the broader economy in the last 3 years. And I think if there was one move to kickstart that consumption, it was with the tax cuts, which happened in February. Then the rate cuts started happening, and the GST is the last lever. So all the categories that we are looking at are essentially in our focus. We believe there will be some winners, some material winners. The broader, I think, sense is that it should hopefully start a structural tailwind for consumption at large in India.
Nice.
So India, the challenge has been that the wages growth has not been very healthy, but it has turned positive now. Consumer has been very, very, shall I say, muted in terms of behavior. You always expect the festival season to do well, but the last 3 years has not been really up to the mark. So hopefully this move by the government should give the much needed confidence for the consumer to open the wallet. Now we have to figure it out as to how the overall metric at the ground works out. But most of these categories are on our radar, and one category which we believe will relatively do better is FMCG staples, which took a major brunt of the muted demand. It had a raw material inflation challenge to navigate, which they have done successfully. And the price pass-throughs that we went through over the last 3 odd quarters, all of that is now in the valuations, in the sentiment. So that is one segment which we have recently upgraded from a neutral stance to positive. So we believe that is one. Staples as a broader category should do relatively better, and we like that as a space.
All right. Let me just bring up gold. In fact, I'm just hearing that Manappuram is now at a record high. Remember, gold is at an all-time high. Let's just pull up Manappuram and take a look. And Muthoot also is just about to hit. Remember, these are gold financiers, and they've anyway been climbing along with that move in gold prices. They can, of course, continue to give out more loans given the kind of collateral value that's increased here. There you have it on your screen. Muthoot, 1.7, 1.8% higher, almost at a record. And Manappuram, I'll just bring it up for you as well, once again. And again, a record high coming in there. Great news for some of these counters. Amit, what's your take, and what would you advise right now in terms of a strategy when it comes to the gold financiers?
Well, we like them all through, but the valuations have re-rated very significantly. Muthoot was our preferred picks when the stock was sub 1,000, and our take was driven by the quality of the book, their underwriting standards, and of course the tailwinds on the gold pricing. That has largely played out. They are not cheap any longer, but I think the sentiment is going to be driven by the price behavior of gold. So therefore, I would probably refrain from giving short-term calls. But structurally, I think gold financing remains very, very well poised, and Muthoot is one of the better franchises that we prefer.
All right, great. So that's the view coming in on Muthoot. We're keeping our eye on some of those precious commodities today, given the kind of levels we're seeing gold and even silver trading at. So keep an eye there. Let me also move on to some of the other newsmakers. We've got Indus Tower. A few brokerages have given in reports on that one. CLSA says high conviction, outperform rating on an Indus. They've got their target a little bit, but they're very positive on the stock. And Citi has also maintained a buy coming in there. On Indus Tower, Amit, would you have a view or a comment as to why it's looking so positive?
Yeah, I think the underlying metric remains pretty favorable. You're seeing a much more visibility, stronger visibility in the business. So we liked it all through. Of course, the valuations are now much more elevated versus the previous regime, wherein we thought the valuations were pretty attractive. So I would not call it's a negative view, but I would probably be slightly more cautious and buy it probably at the lower levels. But we are structurally positive on the overall balance sheet, overall franchise.
All right. Just before I move ahead, Hindustan Zinc, I just want to pull that one up as well. That's the top F&O gainer today, and clearly we are seeing silver at a record high as well. Like I said, keep your eye on those precious metals. A lot of action happening there. Now it's up for the third day in a row now, Hindustan Zinc. Let me pull that up for you. 1.76%, but 448 is where it's trading at. Pull up how it's moved for the week as well, and you'll get a sense of the kind of moves that we're seeing in that counter. It's looking fantastic right now. Again, Amit, I got to get your quick call on Hindustan Zinc. Where it's at in terms of valuation, 6% up just in a week.
Well, yeah, it underperformed. I mean, it's been one of our profit picks exactly on this hypothesis that the percentage contribution on EBITDA from the silver segment is going to be very meaningful and it is going to drive valuations. It did not work out, but fortunately, it seems to be working out right now. But I think our broader take is that the core business is also going to perform much better over the next 12 to 18 months. And given the dividend yield being very supportive, we like this name, but hopefully should perform better from here onwards is what I would say.
Okay, all right. Let's also bring in some international news or the latest on the tariff front. Donald Trump has again fired the tariff artillery at India, making it clear that he's not lowering tariffs anytime soon. However, India is also sticking to its line that talks with the US are continuing, with Commerce and Industries Minister hinting at a deal by November.
For many years, it was a one-sided relationship. Only now, since I came along, and because of the power that we have with tariffs, India was charging us tremendous tariffs, about the highest in the world. We, therefore, weren't doing much business with India, but they were doing business with us because we weren't charging them. Foolishly, we weren't charging them. So they would send in massive, everything they made, they'd send it in, pour it into our country. Therefore, it wouldn't be made here, which is a negative. But we would not send in anything because they were charging us 100% tariffs.
In every sense, one can see an excitement across the world to expand trading and business relations with India. We've had a little bit of a geopolitical issues overtaking trade issues in our negotiations with the United States of America. I do hope things will get back to track soon and we'll conclude a bilateral trade agreement by fall, November or so, as was discussed by our two leaders in February. We recognize that there's tremendous global turbulence.
All right, continue to stay on top of all the developing news when it comes to the tariff war. But Amit, before we let you go this morning, the top two things you're going to be watching out for in trade today.
Well, I think it's the expectations on how the narrative works out on the global market because Trump treatments, how they're absorbed. And second, of course, the buzz that we hear from the GST Council meeting, I think that the market will react to if there's any buzz which comes along, how the negotiations go on.
All right, so top news, that's really what we continue to track to see how it impacts sentiment. Amit, thanks so much for joining us this morning. Amit Khurana from Dolat Capital. Let's take a very quick break. We'll come back with more focus specifically on those GST reforms, the much touted reforms, when they're likely to take place, what's in store, and how it's going to impact you.
Moto G96 5G. All eyes on you.
I choose a world where we dream, and the limit is the sky. And this world is my home where I'm living my best.
Mindfully crafted home decor fabrics. Sansar, a D-Decor brand. Live consciously.
मंगलती, दिल से करो बात।
भगवान के साथ।
मंगलदीप धूप कोन्स 2 गुनी खुशबू के साथ दे पूजा का बेहतर अनुभव।
How is he always winning?
Moto G96 5G.
Eyes on you.
Hello, Moto.
Moto G96 5G. All eyes on you.
Hi, here are the top headlines presented by Motorola. PM Modi slams RJD and Congress leaders for insulting his mother. Election Commission issues notice to Pawan Khera for holding 2 voter ID cards. Rijiju accuses Rahul of attacking institutions with bigger plan.
Moto G96 5G. All eyes on you.
How is he always winning?
Moto G96 5G.
Eyes on you.
Hello, Moto.
Unrivaled, unmatched, unequaled, unchallenged, unassailable, undisputed, unpolitics. 7 weeks, #1. Only on India Today.
Make your media plan smarter with India Today Live TV on your connected devices. Amplify your brand with 100 million smart internet viewers. To advertise, mail us at sales@aajtak.com.
Welcome back. You're with us here on the Business Today show, and we're tracking markets for you as well as all the major market moving news. Before we get to, of course, the next big development, and that's GST, a deep dive on that, let me quickly touch base on the index. It's flat right now after that immediate uptake based on, anticipating, of course, that big GST meet. But certain pockets, that's really where you got to keep your eye on. We've tracked precious metals and the impact on names like Manappuram, Muthoot. We've tracked Hindustan Zinc, with silver being at a record as well. But also look at sugar. Let me just bring up some of those sugar stocks for you very quickly, because all of them are trending right now. There's really no exception. Remember, government has freed up ethanol manufacturing for sugar companies. Earlier, there was a cap on some kind of raw materials that could be used for that. So easing up on those ethanol reforms have led to the spike in sugar stocks, and they've been running pretty much through the day, yesterday and now today as well. All right, I'll continue to come back to some of those market movers, but we have an entire panel lined up for you to dive deep into what is expected from those GST reforms. A major shake-up is expected, is on the cards, and we've got a 2-day GST Council meet starting in around 90 minutes from now. Siddharth Zarabi joining us, Karishma Asudani, we've got Subhash Garg with us as well, and Prateek Jain to really decode what could potentially be the impact on daily essentials to luxury goods, and really what will be the impact on the markets as well. So Siddharth Zarabi, Group Editor, Business Today, Karishma Asudani, Special Correspondent with all the latest updates. We've got Subhash Garg, former Economic Affairs Secretary as well, and we have with us Prateek Jain, Partner at Leader, Indirect Tax as well at PwC India. So looking forward to getting into the conversation, but first the top news on the meet. 56th meeting of the GST Council kicking off today under the chairmanship of Finance Minister Nirmala Sitharaman, with state finance ministers in attendance. The two-day deliberations are expected to pave the way for major tax relief for the common man. The move comes in line with Prime Minister Modi's Independence Day assurance of easing the burden on households. Reports say the fitment committee under the GST Council has cleared a two-slab rate structure. This will include rates of 5% and an 18% and a special rate of 40% for sin goods and special luxury products. The proposal also includes ending compensation cess on items in the 28% bracket. The Indian garments industry, which employs more than 1 crore people, has warned that a hike in GST on clothes priced at above 2,500 rupees will spell a death knell for the sector. Currently, the premium wear is taxed at 12%, but this may change to 18%. As Business Today exclusively reported last week, high-end electric vehicles priced between 20 lakhs and 40 lakh rupees will be charged 18% GST instead of the current 5%. The concessional rate is likely to continue for electric buses. A report by the State Bank of India has rejected claims by states that they will lose out on revenue because of the proposed rationalization of GST rates. The report says that although there may be an immediate dip of 3 to 4% in revenue collection, the long-term benefits will go beyond simple revenue generation. Lots to track today. We're counting down to that meet kicking off. Let me go across to Karishma first. Karishma, what are you hearing in terms of what's on the anvil, what's on the agenda for the meet? How likely are we to see some results? What will be some of the major challenges to getting this through?
Well, Aabha, we've been exclusively reporting for the past 1 week about what could be on the expected line of discussion at the 56th GST Council meeting. Let's not forget that this is happening right after close to 9 months. The last one was in the month of December in Jaisalmer, where key decisions, especially pertaining to health and life insurance of individuals, had to be taken up. The central government, of course, along with the state representatives, had then decided to put it on hold, but it is very likely that in this GST Council meeting, which is going to be convened today and tomorrow, the government is going to go for a nil GST on premiums on health and life insurance for individuals. Besides this, definitely it is going to be the simplification of the tax slabs, which is 5% and 18% that government has now proposed, and most state ministers have, of course, supported this idea of simplifying it and bringing it to compact 2 rates with a special 40% rate, which will only be on sin goods. Now, a big challenge which has been highlighted by a couple of states in the last few days has been definitely on the revenue gap, which is going to come in because of this rationalization exercise. In fact, 10,000 crore is the amount that has been flagged off in the Fitment Committee's report for just the rationalization. Besides this, there could be more additions because of the compensation cess going away. A big decision will have to be taken by the council in these 2 days on how are they going to fill this revenue gap, and secondly, if there has to be an additional levy beyond the 40% special tax that they want to put.
Thanks so much, Karishma, for bringing us all of those key details. Siddharth, let me set the tone for this conversation with our guests as well. Like Karishma mentioned, it's really where is that gap going to be filled from? How are they going to work out the compensation with states? Where are the additional levies going to be? These are some of the key questions, really, that we're expecting to be thrashed out during this meet. Isn't that right?
Absolutely, Aabha. And to add to that, when will this GST rate cut come into effect? Because that's the big buzz on the street. We are already seeing signs of a consumption slowdown where consumers are deferring their purchases on account of anticipated GST cuts lowering. But remember, it's a mixed bag. 175 goods likely to fall as far as the rates are concerned, but a bunch of other items could move up. And in fact, if I can, let me take that question across to both Pratik and Mr. Subhash Garg. Pratik, very quickly, at this stage, your sense of what is the big key takeaway? We now understand that the government, the center, is keen to push through this implementation by the first Navratri, 21st of September. What is your own sense?
Thanks, Siddharth. I think, look, this will happen soon. Now, whether it will happen on 21st of September, one is also hearing that it could happen midnight on September 5th itself. That, of course, the council will decide, but it's very clear that it will happen within next few days. In let's say next 10 days or so is expected, and I will not rule out the possibility of it happening from midnight on September 5th as well. Now it's a big one because initially we were hearing that only 12% and 28% rate would be touched. On 28%, you have cement, which will go down to 18, and a lot of automobiles, particularly the smaller cars, will come down from 28 to 18, and that'll be a big one for the consumers. And of course, 12% rate would come down to 5 on most products. And you have food products, fruit juices, namkeens, and so many other products which will come down, healthcare equipment, and so on. But now what we're hearing is that even a lot of FMCG items under 18% could also come down to 5%, and that could mean toothpaste and shampoo and sort of hair oil and so on. And that's really the big one, right? I mean, for the common man. So it seems like we are heading for a big bonanza for at least you and me. There will be a revenue impact, as was being mentioned earlier, and the estimates vary from 1 lakh crore to more. But the government will have to see that how they recoup that money. Usually, when you reduce the tax rate, it increases the tax base as well. So some bit of that will come from increased demand. So let's see how it goes.
Absolutely. And Mr. Garg, as I bring that question to you, it's clear, viewers, that we have a headline at this stage. There is some anticipation and the latest buzz, not 21st, not the first Navratra, could happen from the 5th of September, midnight itself. And Aabha, clearly, let's keep an eye out for all those consumer stocks also that Pratik brought up. But Mr. Garg, is it possible to do it 5th September, midnight, and sort of prevent some of the slowdown that we have been seeing in certain product categories?
See, when the Prime Minister announced it from the Red Fort, he sort of touted it as a Diwali gift. Diwali is in October. So he wanted a big gift, double bonanza, double gift for Diwali. Now, as Pratik was also saying, that it was realized that this actually created a problem, because anyone who expects the car prices to come down by 2 lakhs or 3 lakhs or something would postpone the purchases. And that, I think, gave a kind of shock to the government that this has had an unintended consequence. And therefore, I think it makes sense, absolute sense, for the government to notify it as soon as possible. Now, depending upon what comes out, we are all assuming that the GST Council will have a smooth sailing, and it can, because the government of India and the BJP states had overwhelming majority. If they decide to go by the majority, they can steamroll, and the GST Council can decide. But GST Council has been deciding based on the consensus so far. And the opposition states have made it very clear that unless they have a path forward for covering their losses, which are going to be substantial, if it comes from the Prime Minister, it can't be less than 2 lakh crores, in my judgment. Nirmala Sitharaman gave 1 lakh crore of bonanza or giveaway for the income tax. Prime Minister can't give you less than that. So if there is 2 lakh crore kind of hit coming to the states need to be covered. Now, how does it play? I expect this meeting not to be very smooth. There would be fireworks, and how ultimately the government decides to go. It had happened earlier in the case of not paying the compensation or paying it by the loan. There was a big tug of war in 20 for this account. Here it can also be. So depending upon how technically it requires notifications by all the states and the center. I don't think it requires the amendment in the law. Because if amendment in the law is required, then you have to go through the ordinance route. It might take longer.
Absolutely, but since the rates are out of the main bill, Mr. Garg, you are absolutely right. And the big headline and key takeaway at this stage, apart from the possibility of a 5th September midnight bonanza, is also the number that you mentioned. Pratik, does this mean the quantum of giveaways, revenue giveaways? I won't term them as revenue losses because if consumption goes up, it will perhaps neutralize to some extent. But how do you think the GST Council will want to make up this 2 lakh crore gap or 1,50,000 crore gap? Clearly, items at the upper end, the so-called upper class consumption, are going to become pricier from a tax point of view.
I think, Siddharth, they have limited avenues to increase the tax rates at this point in time. So I think this revenue giveaway, I mean, so of course, on some products, it could go up, but that will not be very material. I mean, it will not offset the revenue loss per se to a large extent. And therefore, it has to be seen as a long-term reform. Just bear in mind that when we started GST, we thought that 15% was the revenue neutral rate. We actually started with 11.5%. Now, with these giveaways, the rate could come down to below 10%, the revenue neutral rate or the rate average rate, which is one of the best amongst all the developed economies. Forget about developing, right? So it has to be seen as a long-term thing. So over a longer period, what happens is the tax rate is moderate, the tax base increases. And that's what you have to bank on. I personally don't see a lot of avenues to increase the tax rates. Might be few products here and there, but it will not materially offset the revenue giveaway that we're talking about at this point in time.
All right. Well, yesterday in Chennai, the finance minister spoke about the next-gen GST reforms, highlighting how they'll simplify compliance and help small businesses thrive. Let's also listen in to her take.
Complementing this, the planned rollout of the next generation GST reforms with the council meeting tomorrow and day after, in the coming months, it will set an economy absolutely open and transparent with further reduction in compliance burden, making it easier for small businesses to thrive.
All right, let me get back to that conversation and a couple of the points that both Pratik and Subhash mentioned. Now, ruling party and allies do control about 80% of those votes, Mr. Garg. And, of course, the Prime Minister had earlier suggested a rollout, as you mentioned, before Diwali, even though Pratik is saying we could hear the news sooner than that. Now, if we take a look at what the states stand to lose as well, about 33% of the centre's gross tax revenues is budgeted to be transferred to states, and states would ultimately bear 2/3 of the revenue loss as well due to those lower rates. So given the kind of numbers we're looking at and that you also described earlier, I just want to push to understand really the kind of combinations and permutations they may look at here, because if the avenues are limited, clearly there's consensus in wanting this to go through. But if the avenues are limited, it could be a huge disappointment for the market. So what is the best case scenario?
So see, this is the trickiest part.
Yeah.
And I would set it in the context of what is happening to the fiscal revenues of the government. I don't know whether you looked at carefully the July numbers which CGA put out. There is a gross tax reduction by 11%. This has not happened. Income tax reduction is about 35% in that month. This kind of fiscal situation, coupled with whatever losses will come on the GST front now, makes it very difficult for the center to also compensate these states. Now, in that situation, the different kind of combinations, of course, you can continue with the GST cess for some time, but that's anti-reform, that is anti-market. So I don't think the government would go through that route. Can center pay from its own resources? As I said, this looks highly unlikely. It is difficult for center to manage its own finances. In that situation, I think this idea of gift actually is going to be a hit on the fisc. So a hit on the fisc is what is the way ahead I see. The long-term consumption boost, etc., is too woolly. I don't think we should put any store by that. That also depends upon a very larger story. What is happening to the incomes in the economy? What is happening into the labor side of growth? Is the growth, whatever 6 or 7 or 7.8% happening, is it going to the labor which consumes or not? I think there are very, very disturbing or different signals there. So I won't at this moment put it that it can be managed. Let's treat that the center willingly has agreed to take hit on its finances and the states will suffer the collateral damage.
Okay, I think we need to dive into those numbers a little deeper, and I'm also going to come back on the impact on the bond yield. But just to mention exclusively that the new lower GST rates could potentially be announced from September 5th midnight. That's actually right after the meeting, according to our conversation just now with Prateek. PwC in India saying that the GST Council decision may actually be implemented as soon as possible, not waiting, in fact, till that Navratri period. And that would be a huge impact for the markets that we're currently waiting for some kind of signal in September with a rollout in October. So this would actually mean that things would escalate and we'd start to see that boost in consumption a lot faster as well. But let me come back to you as well, Mr. Garg. Is the hit on the fisc getting translated into a higher Indian 10-year bond yield? That's the question, because will that mean higher government borrowings from the market?
Absolutely. You see it written all over in the bond yields. For last couple of weeks, the bond yields are only going one way up. I don't speculate, but I see if this trend continues, 7% on 10 years yield is not far away. So that is the way the economy reflect on what kind of changes you are making, what kind of gifting away of the taxes you're making. Sure. You have no cushion on the expenditure side. The expenditures are bound to go up further. Look at whatever the fertilizer prices and otherwise. So and there is very little flexibility with the government now cutting both on the income tax side as well as on the GST to sort of manage the expenditure on that. So bond yields are headed.
Okay. Mr. Garg, I'm out of time, but Prateek, I have to get one last comment from you. I literally have 30 seconds. The impact of course, that move on yields, will that mean higher inflation? And Mr. Garg is saying that the impact on consumption and the resulting impact on the government's balance sheet will be woolly. Just to sum it up, what's your key takeaway in terms of the impact that we're going to see, whether it's on consumption or whether it's on bond yields?
See, look, I'm optimistic. That's not my subject. I will only say that consumption would increase substantially. It's good for tax reforms. I think the medium-term to long-term impact of this rate cut would be much better than what we are anticipating as of now. So I'm quite positive on this.
Okay, so super positive from Prateek, still a little apprehensive from Mr. Garg. And clearly the headline, Siddharth, is that we may see the news a lot faster than anticipated. September 5th, waiting for midnight, waiting for that meeting and to see the results come through on that. Gentlemen, thank you so much for joining us on that special show around the GST meeting, what's anticipated, what's in store, and what's likely to be the impact. Thanks so much for joining us.
Moto G96 5G. All eyes on you.
How is he always winning?
Gotta have some spin, never bend,
Moto G96 5G.
Eyes on you.